Welcome to the What Bitcoin Did podcast.
Hello there from sunny Los Angeles. How are you all? How was your weekend? I'm just off the back of Russell Okung's Bitcoin Is event. And yeah, it was a great event for those who attended and all those I met. I think you can agree they did a really great job. And I also hosted a fireside chat with Russell, which I'm hoping to get released on the podcast very soon. Anyway, welcome to the What Bitcoin Did podcast, which is brought to you by the mighty Kraken, the best place for you traders to buy and sell Bitcoin. Next up in my Libra series is an interview with Peter Todd and Jameson Lopp, where we review Libra's technicals. But before that, let's hear from my amazing sponsors. So first up, today's show is brought to you by BlockFi, and I've just received my latest interest payment, which is great. I love it. I love that my Bitcoin is working for me every month. And with BlockFi's latest funding round, I'm really super confident for the future of the company. I'm happy to be invested with them. I'm happy to have part of my Bitcoin with them, earning interest. With a BlockFi interest account, you can earn interest every month on your Bitcoin, Ether, and GUSD. And also with BlockFi, you have access to crypto-backed loans, where you can get a loan against your Bitcoin, Ether, or Litecoin. And they've also got some amazing new stuff coming soon. So I'm going to be catching up with Zach, finding out. But if you are interested in trying out any of these, I recommend you head over to blockfi.com, which is BLOCKFI.com. Also, today's show is brought to you by the mighty Kraken, the best place to buy and sell Bitcoin and the most comprehensive set of tools out there for you traders. I also just met up with Jesse. I called up with him to find out what's going on with Kraken. They've got some exciting new things coming, so I can't wait to tell you about that. We already know they've got the best security practices of any exchange, and for you traders out there, they've got so much. You've got Kraken.com, which is the best place to buy, sell, and trade digital currencies. You can margin trade with up to 5x leverage. You've got access to futures and indices. With the Kraken OTC desk, you can access large trades with private and personalized services. And with CryptoWatch, you can trade on multiple exchanges from a single platform. You know they're the best one out there. You know you should be trading with Kraken. Come on, join me in supporting Kraken. Head over to Kraken.com, which is KRAKEN.com. Okay, so on to my second episode in my Libra deep dive series. And after our broad overview on Libra, which I did with Bill Barhart, I've got a technical analysis show with two absolute heavyweights, Jameson Lopp, Peter Todd, where we get into detail on the tech side of things. The reason I wanted both Peter and Jameson on is they both wrote articles after Libra was announced. And while they had different views, they highlighted some also similar concerns. But they were kind of similar in tone as well. So I thought I should get them all together, do the deep dive, let them break down the issue with the tech. And both their articles are also included in the show notes. You might want to get a read of those. With these two as guests, though, it's no surprise. It's a pretty massive show. We get into so much from the issues with validator nodes, scalability problems, Libra Foundation politics, and if regular users outside of crypto will even care about Libra. Interesting questions. It's a great conversation. You know, if you've got any feedback, you can email me on hello@whatbitcoindid.com. Also, just a couple of notes. I'm about to head off to SF. I'm about to go and catch a flight. I've got an important interview tomorrow, one I've been working on for about a year, which I can't wait to get out. Can't wait to release that. It also looks like I'm going to be heading out to Taiwan shortly to record a couple of shows for Defiance, which will now be launching at the start of October. Sorry about the delay for that. It's just been a lot more work getting it ready than I thought. I'm also going to be heading out to Riga for the Honey Badger Conference, which I will be emceeing. That's on September the 14th to September the 15th. I'll also be heading to Wyoming for Caitlin Long's Biohackathon. That's September the 19th to 22nd. And after that, I'm going to be heading to Crypto Springs, which is 23rd to 25th in Palm Springs. September's going to be pretty busy. Lots going on. Hopefully I'll get to see some of you, catch up with you. It was great to catch up with some of you at Bitcoin Is. Really appreciate everyone coming up and telling me how much they enjoy the show. It means a lot. All right, I hope you enjoy this. Like I say, if you got any questions, feel free to hit me up. Hi, Peter. Hi, Jameson. How are you both?
Great. Couldn't be better.
Awesome. So we're here to talk about Libra, but firstly, I don't know if you both saw, but England won the Cricket World Cup. It's kind of a big deal.
Yes, England is my favorite team of all of the stick bat teams.
Well, I'm having a beer.
I quite like cups.
All right, anyway, we're going to talk about Libra. I've been through your article, Jameson, very useful, and Peter, I've been through yours. This is going to be more of a technical conversation, I expect, so I'll need my normal hand-holding, but I think I kind of got my head around both of your kind of thoughts on it. We'll start with you Jameson, first, and then you, Peter. Initially, just to set us up, it would be interesting to know both of your initial reactions, because we all heard about Libra for a long time in advance. Everyone had kind of assumptions of what it was going to be and how they were going to deliver it, but now we know a lot more about it. It'd be great to know what your kind of initial reactions were, Jameson.
Initially, I was actually pleasantly surprised with regard to a few things, mainly that it seems like they do have some technically competent engineers who are working on it. But, upon closer inspection of the various white papers they put out, it's clear that they still have quite a bit of work to do. And so there's still a lot of open questions, and that's part of the reason why people are still talking about it so much.
I was, very much unsurprised by the technology, and I'd kind of say I don't really think it's all that good either. But what really surprised me was the politics. I was expecting them to go and have a specifically U.S. dollar backed coin or something like that to go challenge the leaders of the world with a new currency is, I think, crazy.
Right. So you think they would have just been better off with a dollar peg stablecoin?
Well, given that they're in such political trouble already, I think it's amazingly audacious to, make this kind of statement.
Right. And if they'd been with a dollar peg stablecoin, we've already got a few. They probably would have been in a much better position and maybe not hauled in front of the Senate. I think it's on Tuesday. David Marcus is there.
Yeah, I mean, it's the kind of thing that the only rational for it to be sane to do would be to go direct attention away from something else bad that you're doing. Not a very feasible thing to do when you're such a large company that's already hated by so many people.
Especially conservatives.
Yeah, and Democrats as well, for kind of similar reasons in some ways, just opposite sides of the coin.
It seems to me like at least part of the reason why they may have gone with this basket-based approach is that they want it to seem even more decentralized, so that, we're not completely centralizing our currency around one fiat currency, but rather we're going to try to make it as stable as possible to even prevent, fluctuations that may happen in the major currencies. But like we said, that may very well backfire from a political standpoint.
I would push back on calling such a basket decentralized too. It's still centralized around a very small set of currencies. The only way you call that decentralized is in the sort of language of geopolitics, where nothing's really decentralized. It's always about political power.
Do you think also it might have been more of I'm guessing this is going to be a global currency. Facebook is pretty much in every country in the world. That to have a dollar peg stable coin politically is not a great move in countries that maybe dislike the US quite a bit, and that by having its own currency, it kind of gets away from it feeling like a US currency and some kind of US dominance.
I think, even in that kind of scenario, it would still be better off for them to position this as a payment solution, let's say maybe multiple different currencies. And equally, the US, I think the only parties there that really matter that much are the US and maybe Europe. Other countries are just too small for them to not be able to steamroll them.
I think there are a number of questions around, how these end users are going to denominate the value. Are they going to get to choose? Like, I prefer to keep my value displayed to me in one certain fiat currency, but on the back end, it's actually this complex basket. And what are the ramifications of that, especially from regulatory and tax standpoint? It seems like the sort of hand-wavy answer right now is that, there are going to be regulated endpoints that are going to handle a lot of that. But then, of course, they're also touting the protocol itself as being open for anyone to build on. So, what happens if we end up having less regulated endpoints? And, will there be flagrant, violation of a lot of regulations simply because people will be using it without worrying about tax rules or other regulations?
I mean, that's kind of been Facebook's MO since it launched, whenever it was, 12 years ago. I can't actually remember. But their MO has always been to flagrantly disregard laws, especially with regards to privacy, and then, go for their growth, go for expansion, and almost pull back afterwards. I mean, their privacy to begin with is terrible. It's improved in some ways. My expectation with this is they were doing something similar, but it seems like because they're so big now that actually they can't get away with that the regulators realize how powerful they are, and actually they're going to have to follow certain regulations almost from launch.
So I actually strongly disagree with that take. And the reason why is because privacy laws, from what I know, tend not to cover anything Facebook ever did until more recently. The way to better describe that it was very unregulated, that there was nothing actually stopping companies from Facebook from existing, because people were opting into providing all this information to this company, and there just wasn't regulation around this. I think the better example there is actually Uber, which very much was actually acting illegally in many places. Well, maybe a little less than some people would like to portray it as, but certainly in a lot of places they were flagrantly violating laws. And interesting, of course, Uber is part of the Libra consortium apparently, so that may say something, but I don't think the comparison to Facebook is apt.
Interesting. All right, well, we'll work through both of your points. My general take from both of you is slightly different. Peter, you seem to have gone originally down the route of it's quite disingenuous, the white paper and some of their proposals and some outright lies. Whereas Jameson, you focused a lot more on the complexity of what they're doing and some of their unanswered problems. But I'm going to start with you, Peter. I'm going to start with just a tweet you put out. I think this is a quote from their white paper, but you put the Libra blockchain is a decentralized, programmable database designed to support a low volatility cryptocurrency that will have the ability to serve as an efficient medium of exchange for billions of people around the world. And your comment underneath is, that is a lie.
Yeah, specifically the saying that, fiat currency backed system is decentralized is right there on the face of it a lie. It just is not possible to back a decentralized system by a fiat, quote unquote physical asset. It's, you just can't do it. So the moment you go put those, two statements together, you're lying. And on top of that, the actual technical architecture of it is also not decentralized. What they're proposing is a federated system where a fixed set of entities could control the system. I'm sorry, but you just can't call that decentralized. And I'll point out sort of more meta point that the reason why I made those comments rather than say taking the tone that others have taken is it's a lot easier to go point out when people are lying, because often it's just so blatant in this industry. I didn't want to go and sit down and spend a couple hours writing an article. I wrote what was easiest to go do because I had other things to do that day, and it was just to point out the obvious lies.
There's also a fair amount of marketing taking place here, especially like even just the use of the word blockchain, even when they admit that the fundamental structure of the database is not a blockchain, though there is a blockchain that gets used in there amongst some of the validator nodes, but they're using a lot of these terms that have cropped up over the past few years, and some of them they're using them in a sort of aspirational sense. And others, like the decentralization term, it's been so overused at this point that it's hard to even say, what is centralization or decentralization, because people are using it in a variety of different ways. And I mean, you could probably make an argument that a federation of 3 or 4 nodes is quote unquote decentralized. But even just the fact that you're making an argument like that is kind of a waste of time, in my opinion.
Well, it seems to me they've cottoned on to 2 different angles here. The use of something like cryptocurrency seems to be something that would appeal more to users of Facebook who've maybe heard of cryptocurrencies. They've never really used them, but they know it's a different type of currency. And they've cottoned on to things like decentralized and blockchain, perhaps to appeal more to the industry side of people, potentially developers, wallet providers, anyone, or exchanges who might work with Libra. It seems to me that's maybe what they've done there, but they certainly are marketing terms.
Like, I don't like people kind of trying to, push back on these ideas that, centralized, decentralized have fairly rigid meanings. And I think what the lesson we learned there is simply we have an industry that's just full of scammers and people who are dishonest. Just because a million people go and claim vigorously that the sky is red, not blue, doesn't mean the color changes. It's only until you get to the point where the very meaning of red is different and, you are actively changing the use of that term everywhere, that kind of logic makes sense. And I don't think we're there with decentralized versus centralized. I think they have fairly clear meanings that are, used in a way historically as well as recently. And what we have to go point out as an industry is, look, Facebook's willing to lie about this. They've been willing to lie about plenty of other things. This shouldn't really be surprising that a dishonest company will go hire researchers who are dishonest and go and publish dishonest white papers. That's just the way this stuff works. And by not pushing back on that every single time, you allow people to get away with these things.
Do you have a preference for who manages money if you had to choose between Facebook and the government?
Well, I'd say neither, but in most places, the government.
Okay, interesting.
Well, I think perhaps part of the problem here is that, they're intentionally using some of these loaded terms like centralization and decentralization instead of specifically talking about, what is the threat model, what is your actual level of security against certain actors within the ecosystem, basically subverting your own action. If we're really talking about this federation of private companies, how many of them need to collude against you to make the utility of the system a lot lower for you?
So have either of you actually looked at the threat model? Because one of the things I did consider with these companies who are the node operators is that they have a lot to lose by acting dishonestly. A lot more, say, than a government does. Like, what happens with a government? If they act dishonestly, we all just kind of suffer it because we're used to it. But with a company, you can actually vote with your feet. And, scandals aren't great for companies.
I think the problem with that is what dishonesty means can vary a lot. I think a company, to say just directly steal your money with no legal reason whatsoever is, I think, very unlikely. But I also think it's not necessarily that likely for even, say, Bitcoin miners to want to do that because the legal risks are too great. But to do things that only seem a little dishonest, such as stealing your money on some trumped up government reason that everyone knows is false, well, that seems very likely. Why would you want to go up against government there?
There's also, I think, the issue being that we don't fully understand how the dynamics of this Libra Association are going to turn out, because I think there's going to be inevitably a lot of politics, and the fact that, this thing is not operational, and it's probably not going to be operational for another year or so. We don't really know what, I guess, the bylaws or other processes of this Libra Association are going to be. As far as I'm aware, none of that is public. But I guess at the end of the day, if there is a sufficient level of voting by members in the association, they could theoretically change the protocol, the network, the whole operation of the system at a whim.
It's important to point out that at a technical level, what they're designing isn't auditable. And indeed, there's been some statements made that make it sound like the actual blockchain data itself, they're not going to make publicly available. It'll be hidden away in these so-called validator nodes, and all you'll get is essentially a signed statement saying, well, yeah, we claim that this is true, but we're not actually going to prove it to you.
I've had at least one of the Libra folks say that, and once again, this is a sort of hand-wavy far future thing, but I've been told that the goal is to make it possible for someone to download and validate the actual blockchain. But, it sounds like that is not even technically possible at the moment, and who knows when or if it will be.
And I'd say it's also obviously not feasible if Libra catches on, because the amount of data you're talking about is going to be such a huge amount. You're not going to be able to do this by just walking up to them and asking. You're going to have to go negotiate some agreement and pay some costs and so on. This is not going to be a cheap data structure that will distribute widely.
I think one of the other differences is that I doubt people are going to be holding serious amounts of money in Libra like maybe you would do in Bitcoins. You know, there's a serious risk to people losing a significant amount of their wealth, certainly early adopters or people who've invested heavily in Bitcoin. If something was to happen there, if there was some way of confiscating money or stealing money from the system, or something dishonest could happen. I see Libra more as a tool that people will perhaps load a few dollars in as and when they need it, but I can't myself see people loading thousands and thousands of dollars into it. So whilst there's risk, it feels like there'll be less of a risk.
You don't think that Libra coin might become bigger than Tether as a Bitcoin fiat on-ramp?
Yeah, I guess so. But then if I was a serious trader wanting to use a stablecoin as a Bitcoin on-ramp, I would rather use Tether or GUSD or something else than Libra coin. But, it's a fair point.
Would you really, though? Like, aren't all of those operating under similar types of setups where basically the administrators of the stablecoin can burn your coins without your authority?
Of course, but I feel like Facebook is, I don't know, it just feels less part of the Bitcoin ecosystem. It feels like it's more of it just feels like it will be under more regulations. It feels like it will be kind of tied to the government. I can imagine them having certain arrangements with the government after their Senate testimony hearings, which I don't think the likes of Tether have. But I mean, you might be right, but I don't know. It just feels different to me.
One big difference between Tether and Libra is that, at least in the near run, in theory, you can actually audit what Tether is doing. In Libra, the way that they seem to be going is that no one outside of the Libra coalition will actually know what's happening on the Libra blockchain. In Tether, it's all public. I mean, this is why you get all kinds of various Tether tracking Twitter accounts and websites and so on, watching like a hawk every time they go, issue some coins.
Yeah, that 5 billion or so issuance recently and the subsequent burning was definitely fun.
Yeah.
Yeah, what was that about?
From what I could see, someone made a typo in doing something a little weird to move Tether between different chains. And then everyone kind of jumped on it. I
think it was Poloniex came out and said that they screwed up doing a chain swap, I guess.
But it's important to note that Poloniex said that they screwed up in something that they were doing with the assistance of Tether, which sounds like it was actually Tether making the transactions, and they were just being nice and what they, taking responsibility for the screw up.
It's quite interesting. I was sat down recently with Brad Stevens from Blockchain Capital, and he had an interesting take on Libra being a win-win for Bitcoin. He said that if it does go ahead, it will be a great introduction to cryptocurrencies, probably lead people more to Bitcoin. But if it doesn't actually launch, if for some reason they can't launch it, the government start banning it, the regulations are too tight, it's another win for Bitcoin because it got regulated away, whereas you can't regulate away Bitcoin. So it kind of proves the Bitcoin use case.
I think it depends on how it gets regulators away. I mean, the worst case would be that they go set up a bunch of focus groups and so on in the various bureaucracies that then are out of a job because Libra stops and they want to continue having something to work on.
But at the very least, hopefully it'll keep the administration focused on Libra and their actions and at least keep them a little bit less focused on Bitcoin, even though I think we all agree that if they did try to put pressure on there, that it's not really possible to kill Bitcoin, but regulators can certainly still cause a lot of grief for enterprises that are operating in the Bitcoin ecosystem.
I would push back on this idea that you definitely can't go kill Bitcoin. If regulators really wanted to, they do have some options, such as, for instance, banning the manufacture of ASICs or forcefully inserting backdoors in them. There are some fundamental issues with Bitcoin's security model that have vulnerabilities in ways that other solutions don't. And so far, it looks like those vulnerabilities aren't really a big issue. I mean, it's a very, very, very major geopolitical risk to go start telling ASIC manufacturers, hey, you can't go build these chips. Because that's a real point of contention among militaries around the world. How do you get access to this? How free is this? And so on. But it is a possible route, much the same way as that censoring the internet fully is a possible route. Are these things likely to happen? No, but we should be careful about our language and how we go talk about this. What we think is possible or not.
So maybe Libra is actually causing problems for Bitcoin. It's bringing too many eyes onto it right now.
I honestly don't know one way or the other. I think they're both possible, and it's tough to make definitive statements about that.
All right. Well, before we get into the technical stuff, there's just one other thing I wanted to refer to. I think you both read the article. I know you tweeted out, Peter. It was the Eric Wall article. The problem with Libra is that it's part of Facebook's broader surveillance capitalism strategy. Do you have worries about that as well?
I think it's inevitable that Facebook will go use this as part of surveillance capitalism. The credit card companies and banks and so on already want to do this as well. Probably the most positive thing that could come out of this is by tying such an obviously bad actor to financial surveillance. With any luck, we'll get some political pushback on financial surveillance in general. It's good when an entity like Facebook that everyone realizes is evil, so to speak, goes and surveils you financially, or at least has proposals to do so, because then some of the laws can then get used to fight the existing bad actors such as Visa and MasterCard.
There's another issue there as well for the US government to consider, that is if they do regulate Libra away, they're kind of handing something to the Chinese with WePay and WeChat. I've had it a couple of times recently. I don't know if you have, but I've actually had people ask me if I would pay them using WeChat.
Well, I think it depends on how they regulate it away. Maybe the best thing that would happen is that they regulate away not only Libra, but also WeChat and WePay and so on. I mean, obviously, they're not going to make it go away in China, but they can at least stop it from infiltrating the Western world, which you are beginning to go see happen. Australia is an example. You do see WeChat and WePay and so on logos, at stores.
Anything to add, Jameson?
I think that it benefits governments to have the ability to control the companies that are controlling the movement of money. So really what I was trying to think more about is, well, you can't get rid of all of them. What are you going to do? Are you going to have the central banks build systems like this and make everybody use those? I don't really see that happening. So it seems like it would be easier for governments to allow, whether it's the traditional companies to continue operating the same, or to work with these new consortiums of companies to try to get backdoors and surveil as much of the flows of money as possible.
Actually, in Canada, there is effort at the central bank to implement something that, at least at a technical level, would be somewhat similar to Libra's blockchain, but with R3 Corda, to essentially create a digital currency that the banks could end up using to represent movements of Canadian dollars. And to see that then push into the retail sector, I actually don't think is very unlikely. I think the main reason why that's sort of not happening quickly, and some countries not happening at all, is more pushback from banks. I think I could definitely see situations where the governments are interested in having that happen.
Well, we need to track and stop the terrorists.
Well, I'm more just thinking like banks already provide that ability to government. So to go and take the next step of disintermediating a lot of the banks from the government's purpose of providing bank accounts doesn't seem that unlikely to me. And it may actually be a tool to make politically getting rid of cash easier, because then you can go make the claim, well, all right, everyone has a right to a bank account, which of course they won't, because governments will pick and choose who can actually access banking services. But it's a politically more palatable solution to getting rid of cash than saying, oh, by the way, all these private companies now can hold you hostage.
Next up, I talked to Peter and Jameson more about Libra's technical challenges, but before that, I do have a message from my amazing sponsors. So today's show is also brought to you by Dropbit, and you know what? They also sponsored the Bitcoin Is event I was at yesterday. They're doing so much to support the community, and they're doing so much to support my podcast. So make sure you definitely check them out. Have you downloaded the wallet yet? I know a bunch of you have. You're always telling me, and I'm always sending Bitcoin to some of you. But if you haven't, please do. I think it's an amazing app. I always use it now. Whenever I'm traveling, I've got sats in there. And, I use it to settle balances with people. If we go out for dinner, I pay people with Bitcoin from my Dropbit wallet. It also has these other cool features. You can tweet Bitcoin to people. You can text Bitcoin to people. It really is like a Venmo for Bitcoin. They are hard at work on a bunch of new features, which I can't wait for them to announce. Some really badass stuff coming. So come on, go and download the app. It's available on the iPhone and Android. Just head over to dropbit.app, which is DROPBIT.app. Also, it's time to announce a new sponsor this month. And those who follow me on Twitter know I love sports. I love my football. I love your football. I follow the US football quite a bit now as well. And there's some big changes this season. You got Antonio Brown and the Raiders. You got Le'Veon Bell is with the Jets. Odell Beckham is with Cleveland. And MyBookie is the place to bet on football every weekend. And guess what? They accept Bitcoin. Why? Because they're badasses. So if you want to bet with Bitcoin, you can do it at MyBookie. And they also have better bonuses and more prop bets than any other sport book out there. This year, they're hosting the first online handicapped super contest. First place is a guaranteed $100K, and it only costs $100 to enter. All you got to do is pick 5 NFL teams against the spread every week to climb the leaderboard and score your share of the huge cash prize pool. You can get up to $1,000 first deposit bonus, and you can double your first deposit. You just need to use the promo code WBitcoin. That's WBITCOIN to activate the offer. You can find out more at mybookie.ag, which is MYBOOKIE.ag. And don't forget to use the promo code WBitcoin when creating your account to claim the bonus. I'm also going to be setting up a bet. I'm going to be betting on the Rams to win the Super Bowl, and I know some of you are going to savage me for that, but I'm in. I want the Rams to win. All right, make sure you check out MyBookie.
Okay, so let's get into some of the technical details. Let's make the assumption that Libra will happen, that it will launch, they will pass whatever regulatory requirements there are. And let's just look at some of the technicals, because you've both covered this, especially you, Jameson, in quite a bit of detail. Both of you actually identified that there will be a scalability issue here. What are the main issues with scaling that you see, Jameson? And then if you can tell me your side, Peter.
Well, I mean, they're still doing all of these transactions, quote unquote, on chain, AKA, in a database that, the transactions have to be broadcast around all of the nodes in the federation and at least have to be temporarily batched up into blocks so that the validator nodes can come to a consensus about what the different state changes are in the system. So, you're going to be using a fair amount of bandwidth and disk IO and, of course, disk storage, because you're sending all of this data around to everybody who's operating on the network. So, they were fairly, I guess, conservative with what they put the minimum specs for a node in the white paper, which still seemed feasible for like a regular human to potentially run a node on the network. I think going for, single core and a few gigs of RAM and a few terabytes of disk space. So they were, however, saying, it's probably only going to be able to do like 1,000 or so transactions per second. And of course, they also seem to only really be worrying about, keeping up with the current state of the network. There, as far as I recall, was no real talk about requirements of syncing and validating the entire state of changes from the beginning of time, because I believe the assumption is that any new node or validator that joins the network will just, find a recent point in ledger history and validate the signatures on that from the other nodes on the network and say, okay, we can just start from here and assume that everything up to that point was correct, because it's, a fairly trusted federation of node entities.
Yeah, I would agree with all that. And additionally, I'd add that certain very low-level cryptographic mechanisms that they're using right now are actually even worse than Bitcoin in terms of scalability, because they don't actually batch transactions into blocks right now. And they don't currently have a mechanism, from what I've seen, where you could actually properly generate state changes in parallel. So, a concrete example of that is if you have 100 different people spending their money, in theory, you should be able to distribute those transactions from those 100 different people across multiple different computers, multiple different cores. In the low-level cryptography that they're currently talking about with the way their Merkle tree of transactions works, doesn't actually let you do that, because every transaction operates on a single state change. Now, these are not unfixable problems, but I think it goes to show that they're, just not taking any of this stuff seriously and not trying to build a scalable system, from day one. And I'll bet you the reason why they're doing this is they don't actually have long-term plans to decentralize Libra or do anything like that. If you have this unscalable centralized system, that's good enough, and it makes things a lot easier. And that's totally okay if you expect to have, say, 10 different people in control of the entire chain.
And this, of course, doesn't even begin to get into all of the questions around the smart contracting system and, how that's going to work from a quote unquote gas standpoint.
Yeah, I've seen in corporate clients of mine this tendency to just, reuse Ethereum tech over and over again because it exists. It's relatively well understood. It may not be very good, but who cares? I mean, this is effectively a tech demo, and I think the smart contract part of it is mostly something they're kind of just adding on to give, A, something for the technical people to go do, and B, hopefully divert some attention from the real political issues around Libra.
Have they not reached out to you, Peter, and asked you to consult on the project?
Heck no. Actually, I don't actually know anyone who has claimed that they're working on it, other than people, listed by name. So that it may be something where they kind of went around to academics and tech people who they knew would be okay with their political ambitions.
Yeah, I do know someone who is working on it, though I won't name them since I don't have permission to do that. But I do believe from my understanding that, they went around to a number of the quote unquote blockchain companies in the space. And basically what Peter was saying is they were looking for the folks who would be at least somewhat amenable to working on a project like this, but still had some general idea of how the tech in this space works.
All right, well, we'll come to the smart contract stuff shortly. One of the things I wanted to ask you about, Jameson, is that one of the parts of the white paper says, over time, membership eligibility will shift to become completely open and based on the members' holdings of Libra. So firstly, you said that's like proof of stake. When you talk about the members' holdings of Libra, are you talking about any user or are you talking about the validators?
As far as I could tell, this was specifically referring to Libra Association members, which ought to be synonymous with validator node operators.
Okay. And then you said this is similar to ETH proof of stake, but that also has its own problems that haven't been solved. What are the main issues with proof of stake that haven't yet been solved?
Well, the longest running issue is kind of the nothing at stake problem, though that might be somewhat additionally complicated with Libra due to the fact that these Libra coins are also backed by fiat and other assets that are being managed by the members of the association. But even beyond that, there's kind of a question of, well, how would the Libra Association balance it if, one member started to hold, an inordinate amount of the assets? This is kind of where we go back to one of my earlier questions, which is like, how are the politics and the bylaws and, the other internal functions of the association going to work? Because they could very easily have major ramifications on how the technical aspects of the system work.
Right.
I'd point out that from a tech level, this notion that anyone with Libra could participate in the consensus needs far better technology than what they're proposing. The simple reality is, if it doesn't scale, you're not really going to be able to feasibly run nodes if Libra actually catches on in a big way. And if you can't do that, you're not participating in the consensus. Simple as that.
Well, they could very easily just do what people are doing already, which is farming out their stake to other people to like basically do pools of stake, right? So they're not going to run nodes, just like a bunch of people who are hashing on Bitcoin don't run nodes. They just let somebody else take care of that problem.
Which I'd point out as sort of a terminology thing. I wouldn't say that someone in that position is really participating in the consensus when they have no real way to run a node. In much the same way as I've argued before that people with hashing power are not truly mining Bitcoin unless they have the ability to run a node and at least double check what's actually happening.
Yeah, it's I think for a lot of those people and entities, it's really more of just an investment than an actual interest in participating in the ongoing evolution of the ecosystem.
And no one's going to be able to become a validator unless they're authorized anyway. It's not like Bitcoin where anyone can join this. You'll have to be authorized anyway.
Well, from a sort of tech economic point of view, that's definitely a true statement, because as long as it's backed by real and by some real thing, the people who are actually in control of the actual assets that Libra is backed by, they're going to have some kind of legal agreement which says, well, basically, if you validators do something sufficiently crazy, we're just going to ignore your blockchain and figure out some other way to figure out what ownership of the assets we hold in trust actually means.
And this is kind of the crux of the issue and the vagueness of some of the descriptions of how the system may work in the future, is because I recall the white paper refers to that issue and says that they're exploring, I think it was quote unquote like market-based options to try to get away from having just a handful of entities that are going to be maintaining that basket of goods. But I mean, I'm not an economist, but I have no idea how that would work. It seems very pie in the sky. I'm not aware of like any system in operation that does anything like that.
A long-term business plan to deal with this basket of goods might be to make it go away. You could imagine a system where eventually they decouple the Libra currency from having an asset backing by it. And then when they do that, they get an opportunity to go make a ton of money by selling off the asset.
Right, so it's not backed by anything, but then they're just like the government and able to print Libra at will.
Exactly. And just like the government, when they go do that, you make a ton of money because now you have a whole bunch of assets that you can get rid of.
Wow. Okay. Well, that's kind of scary. Also, potentially, some of the vague statements are to allow them to get to a point where they are live. It is a system that's operational, and whether or not it is, decentralized, centralized, it won't really matter, because it's not like the majority of the users of Libra are going to be like Bitcoin users who kind of do a lot of research. They find out how Bitcoin works. They find out that, they go down the rabbit hole. With the majority of Libra users are going to be standard Facebook users, WhatsApp users who use it because the UX is great for them to buy something, or they're just not going to care about these things that you guys care about, that you write about.
I think it's maybe too early to speculate who will actually use Libra. For all we know, what might actually happen is a whole bunch of brand new money transfer systems pop up that are using Libra on a back end. They go say that they want to have Libra bring finance to the entire world, but for all we know, that may be complete misrepresentation of what their actual business plans are.
And who knows? I mean, I fully expect that a hyper Bitcoinized world would be one in which the vast majority of people don't know how Bitcoin works or even care, much like the vast majority of people don't know how any of the current monetary systems work. They just want to use it.
Yeah, but there's enough people like you, Jameson, and you, Peter, and other people involved in Bitcoin keeping it honest in the background, keeping it as decentralized as possible. Whereas with Libra, because it's corporate owned, it doesn't have that same kind of culture and group of people who care. All they will care about is Facebook and Calibra itself.
But let's suppose, for sake of argument, that somehow, even 100% of the people who owned Libra in the world cared deeply about decentralization. Even in that scenario, because Libra is fundamentally controlled by a central set of entities, those people wouldn't matter. Nothing they did could change the fact that Libra was centralized, other than sell their Libra and exit, at which point, that initial condition is no longer true, and it's still centralized.
Also, it'd be interesting to see if people actually care for Libra, if they want to use it. One of the difficult things with Bitcoin and spending it is, you do have to do that transaction in your head. What's the conversion? What am I actually spending here? And I know it's likely that the Libra wallet will have, if it shows you how much Libra you've got, it's going to do the conversion to your local currency. But if, say, they integrate this with Instagram and you're looking at a photo and you have the opportunity to buy from it, firstly, are they going to force people to accept Libra? Because if they do, they might, almost certainly will have a lower conversion rate if they don't offer, say, PayPal and credit cards alongside it. And will people actually want to use it?
Well, one thing they can do is make the basket of currencies totally fixed. And then in the UI, because it's fixed, essentially hope that the changes aren't too much, and get away with ultimately lying to people by just making the UI localized so that you go see some dollar value. Now, I suspect they might get away with that for a bit, at which point, unlike, like Bitcoin wallets tend to go show your amount of Bitcoin or, your, say, fiat currency equivalent, like US dollars and so on. And I personally usually have my Bitcoin wallet showing how many of the currency I care about, I have worth. And you can get away with that in a Bitcoin wallet because it's so well known from its users that Bitcoin is a separate asset. I suspect if Libra did that to avoid the UI problems that you're talking about, they would get a lot of pushback. So to me, this suggests either they haven't thought this through very fully, or they really genuinely want to push an entirely new currency. And I think that it raises a lot of questions about what their actual business plans are.
Well, I mean, the big problem at the moment is dropping users on the Facebook network. Their model is, I don't know what, probably 95% advertising model. Yeah, I think they lost something like 22% of users, some crazy number, maybe 12% or 22% of users in the US. So they've got to do something, otherwise they're in big trouble. And moving into money seems like an option for them. Okay, so let's move on to the smart contracts part. You've written about this, Jameson. They're going to be using their own programming language called Move. Have you had a look at this? Do you know much about it? It seems to me that, again, that's another thing that's pretty vague. And I think you said that your expectation is it's going to be quite restricted what you can do with it to begin with.
Yeah, I mean, I tried to look into it and I couldn't really find much information. And I seem to recall that I think it was Elaine who tried to write a smart contract and did not have a very good experience trying to do that. And it's just because it's so early. I think the only things that they've really written and made available are just simple transfer and transaction functions right now. I don't think it's really possible to do anything interesting on the platform.
And Peter, your worry is that the smart contracts in Libra will have similar failings to smart contracts in ETH, and actually it's better in a UTXO model.
Well, I mean, I think the bigger question actually is, will you actually be able to use the smart contracts at all? And from the sounds of it, at least for the foreseeable future, they're not going to allow people to write their own ones. There will be a fixed set of contracts that you're allowed to use and nothing else. And in general, assuming that we're changed, the UTXO model has definitely been much more successful at writing smart contracts that actually work. But I'd also point out that of the smart contracts that you actually need, with a little bit of clever crypto, you don't need much more than just signing. And it's amazing how much you can go do with some clever ECDSA math. Ted Strida, he's done a lot of work on this, and it may be the case that they don't actually need any of these complex languages to do the vast majority of what people want smart contracts for.
Oh, so you're thinking that might be like predefined functions?
Yeah. Facebook has made statements along the lines that you won't actually be able to write your own code.
Interesting. I mean, I guess they want a system that other people will build upon to grow the network. Yeah, it's kind of interesting. What do you think the expectation is, Jameson, with the smart contracts? Is this just to allow people to create wallets, maybe to create more complex e-commerce environments? What do you think?
It wasn't really clear how far they wanted to go with it, other than the fact that it did seem clear to me that they want to support a variety of assets. Now, does that mean that they want any developer, or at least any authorized developer, to create their own or be able to create their own digital asset on this platform? Maybe. It's hard to say how widely used they want the platform to be outside of the Libra coin. And I guess it kind of goes back to an earlier point that I think Peter made about, some of this extra stuff may just be diversionary tactics.
So what, you think that they might allow you to create almost like colored coins on Libra?
Well, because the white paper specifically states that the Libra coin itself is not a native asset. It is, in fact, like defined using the smart contracting language as the first of supposedly many assets.
Interesting. So I guess they could be considering what, like NFTs or in-game tokens?
Yes, theoretically.
Or even localized stablecoins.
Yeah, I mean, it could end up being something like Blockstream Liquid, where there's tons of different stuff. Although, and I'll say this is true for Blockstream Liquid as well, the idea of putting all these things on one single chain doesn't really make that much sense. My explanation for why they talked about smart contract functionality was probably, in the nicest explanation, it's just a marketing thing where they knew if they didn't include it, they'd be made fun of by a whole group, part of the community, so they had no choice.
Okay, interesting. Okay, let's talk about the KYC AML side of things. And, again, going back to Eric Wall's article, it seems like they're attempting to push the KYC AML onto wallet providers and exchanges, exploiting a loophole in that. What do you think is going on here? Because I think it was in Eric's article, he put a screenshot from Libra and law enforcement, where exchanges and wallets will need to follow applicable laws and regulations. Do you believe this is just them trying to exploit a regulatory loophole, or do you think there's anything in that, because they're trying to create a globally distributed cryptocurrency, that trying to create something that covers every regulation in every local market is actually quite difficult?
Yeah, I mean, it would be insane to try to do AML KYC stuff at the protocol level. So I think they at least realized that. Now, the bigger question, I think, becomes how tightly controlled is the access to developers or to other entities to create wallets and other software that may be subject to those type of regulations. How possible would it be for an entity to create like a rogue wallet or rogue application that did not abide by any of the laws of whatever jurisdiction it was operating in?
So we've seen statements from them like really pushing back on the notion of having any privacy on the core chain itself. And one way to, interpret these statements would be to say that they know what they're doing is going to be up against governments and law enforcement around the world who would rather have full control over this. And they're taking the next best option, which is to make a system that has no privacy. Yes, in theory, you have a fair bit of freedom to do things. And if I were in a position of, say, creating a multi-jurisdictional currency, I would probably punt on the, issue of control back to the local jurisdictions where wallets would, conceivably be enforced and so on, and then reduce my exposure, so to speak, to regulatory action by just making everything public. Does this actually give the regulators what they want to know? But it may be a reasonable compromise. And the accounts-based model rather than the UTXO-based model might be part of this, because accounts fit better to this notion of having zero privacy. Accounts like Ethereum has significantly less privacy than Bitcoin in practice because people use it through accounts. So everything is absolutely tied to one single account.
I think it says in the white paper, the Libra protocol does not link accounts to real-world identity. Jameson, you pointed out that you think this sounds good, but you also said, does that mean that developers could build privacy tools on top of Libra? I mean, my expectation that it's unlikely, but what do you think?
Well, right. I mean, there are people, at least in the Ethereum space, who have built, hierarchical deterministic wallets, or who have built mixing contracts and whatever. And so theoretically, if the smart contracting language move was good enough and allowed extremely arbitrarily complex types of interactions like that, then developers could write similar, privacy enhancing functionality. Would it even be possible to do like, ZK snark type of stuff? I think some people have messed around with that with Ethereum. That's why I think the openness of the platform to developers is going to be a big question, because that whatever they open up, somebody is going to try to exploit it and try to improve the system to actually make it more usable.
See, I strongly disagree with kind of your thrust of the argument there, because I don't think you need any more openness than people are able to do transactions without permission. You don't need smart contracting to get very good privacy on these kinds of systems. I mean, at minimum, a couple mixers is good enough to seriously cause problems to law enforcement. It just is not difficult to get privacy. It'd be nice if, for instance, you could run ZK snarks on these things, but it's not a requirement at all. It's more than enough to simply have people get access to the coin. And I suspect that might be part of their strategy around communication, to say all these big things about how they want to be legally compliant when they actually have no intention to. Yet simultaneously, because getting information out of this blockchain is going to be so easy, you can still make money off advertising and selling people's personal data and so on. So from their point of view, they've got a lot of bases covered.
Can you envisage a scenario, say, where a hard wallet provider supports Libra, and if I, was to buy, say, a ledger, and Jameson, you were to buy a ledger that isn't tied to anything, and I was able to transfer Libra to it, that I would then be able to transfer it to you anonymously?
Well, the question is, can someone have that wallet at all without getting permission from the Libra Federation? That's your fundamental question. If the answer to that is yes, then someone can go build a mixer in similar technologies, and then we can go have proper privacy. If the answer to that is no, none of that's possible. And so far, I don't really know what the answer to that will be. What I do know is that they have, in their technical docs, they talk about having authorization just to connect to the Libra Federation at all. So that might be their tool to really lock this down, where you'll have to, for instance, fill out some form to even talk to the Federation nodes and submit transactions. I just don't know.
I definitely think that there has been a few statements saying that it should be possible for peer-to-peer transfers to happen inside the network between wallets that don't have AML KYC on them. But of course, that's not going to be possible until there are wallets other than Calibra, because we know that Calibra as a wallet is going to be doing AML KYC.
Well, I put nuance on that statement. It's not a question of whether there are wallets. It's a question of, what does the tech actually implement? Currently, what they've actually implemented appears to be a system where you have to get permission to even submit a transaction. Will that be true in the future? I don't know. But, what they've actually implemented has that property. Now, there could be a world where there's tons of different wallets around and tons of people can write them, but you still don't have permission to submit transactions until you fill out some government form and say provide your ID. Just because someone's written the wallet doesn't mean that the credentials to actually connect to the Libra Federation are freely available.
Okay. Well, let's talk about gas. I've always felt like gas and transaction fees is kind of a poor UX, as somebody who has been a UX designer, not knowing the fees you're going to be paying for a transaction. You wrote about the gas side of things, Jameson. I'll take the quote from the white paper that many parts of the core logic of the blockchain are defined using Move, including the deduction of gas fees to avoid circularity. The VM disables the meter in a gas during the execution of these core components. Now, your statement was that this is pretty dangerous.
Anything that disables the metering of gas could, potentially be exploited as some sort of runaway infinite loop type situation, a sort of denial of service attack that causes the nodes to lock up for a long time. we have seen, similar issues. Well, at least in Ethereum, there were issues because of mispricing of gas for a while. So there's also questions around, how are the different operations going to be priced within the system?
I mean, it's going to be a difficult thing for users to get their head around, because most people are used to traditional payment mechanisms of any, if you consider Visa or MasterCard's fees as gas, that's something that's passed on to the retailer, and it's not something that the user themselves ever has to think about. But in the world of cryptocurrencies, it's been flipped. It's been flipped that the user has to think about this. And I've always kind of felt that it's poor UX. Do you think they're going to flip this onto the users, or do you think they will follow the kind of traditional payment rails where it's flipped onto the person accepting?
Well, I was less concerned about that as I was just with the general security of the system, and how susceptible it is to edge cases, people who are trying to make these nodes fall over. But it did sound like the whole issue of the fees and how the dynamics of like fluctuating gas prices would work sounded very similar to the way Ethereum has worked. And there were actually some conflicting statements between the like protocol white paper and the Calibra white paper, for example, where the protocol white paper were saying, there will probably be times at which we have to automatically adjust the fee market to make it expensive for people to spam the network. But then on the other hand, the Calibra wallet team seems like they're prioritizing trying to make it as cheap as possible for people to use the network. So it'll be interesting to see how that dynamic plays out over the long term if this system becomes operational and becomes widely used.
It's kind of a weird scenario, though, if it ends up becoming something that's used primarily for e-commerce across the Facebook ecosystem, because you're not really going to want to discourage payments.
In Canada, Interact payments wind up charging the person making them, and no one seems to care that much.
Are they fixed?
I think that tends to be usually like 5 cents per transaction for most people's type of bank accounts. Some of them will go have a bunch free and then go pay out of your monthly fee for your bank account. I mean, that part of the UI I don't think is actually a big issue. I think the bigger issue is just when the price changes unexpectedly. And in a centralized system, that's not that hard to prevent, because you just get enough capacity to stave off any foreseeable attack.
Well, we have something similar with booking flights in the UK. It's primarily there. If you use a debit card, you don't have a fee, but they will pass a fee on to you if you use a credit card. But it's usually a fixed price, and it's quoted. So here's your price paying by debit card, here's your price paying by credit card. And okay, if I pay by credit card, I've got to pay an extra £2, £3, whatever it is.
But remember, in an accounts-based system, the price is fixed per transaction for the type of account that your wallet is using. So every transaction you make will have a fixed amount of gas that it needs to use, thus a fixed price in terms of Libra. With the one exception being that if they go and raise the price of gas to try to go stave off an attack, which I don't think in a centralized system is all that likely, because they'll just get enough capacity that will be a very rare emergency occurrence.
And getting enough capacity is easy enough?
Sure. Pick an amount where the amount of money an attacker would have to spend to spam you is sufficiently high that there's better ways they could go and attack you. I mean, PayPal doesn't really seem to have this issue, and they probably solve it by picking some very large amounts of transactions per second and buying enough servers to handle that.
And so this may very well become another question of how the association itself operates. If they do find themselves to be bursting at the seams with so much demand that they can't keep up, then I expect it'll probably become a political thing where the organizations that are involved have to decide, what they're willing to pay to operate these validator nodes.
Remember that internet already has this issue with internet routing, because the way the routing protocols work is you have to have a copy of the full routing table if you want to be a core internet routing node. And periodically, we've had cases where the number of routes goes up and a whole bunch of internet routing hardware becomes obsolete because it simply cannot maintain all the rights and memory ones. And the internet as a whole seems to have handled this without too much politics. So I suspect from an external observer, we're not going to notice much. Internally, people may very well get kicked out of the association for failure to spend enough money, but for external users, they probably won't notice any real changes.
So the interesting thing is that, if I try to summarize what we've discussed, is that this is highly complex and they're facing a number of challenges and a number of technical problems that other cryptocurrencies and blockchains have tried to solve that haven't. That it's actually, there's a lot of risks in this with them, in launching this. There probably was, for what they're actually trying to achieve, there's probably much simpler ways of them doing this.
Well, if you asked me to go and make a centralized blockchain run by a federation so that you could go and make a new type of asset-backed digital currency, the architecture I pick is actually not that far from Libra, especially if I was under a time constraint. If you told me to go do that in, say, 6 months, I'd probably pick some off the shelf, Ethereum or something similar software, and just reuse it, which is kind of what they've done, so to speak. I think you'd do a lot better if you actually care about scalability. But to me, this type of architecture doesn't seem that crazy, and it's easy to imagine how it would have come about, given how big corporations work and how teams work and so on. So I'm actually not all that surprised. And because it's a centralized system, they can always upgrade it later. They don't have to stick with what they had on day one. They can always change things later, especially in a centralized system where clients are validating. I mean, at the extreme, like if they upgraded all the tech backend, they could even run a separate fake Libra validation chain, so to speak, that created fake data structures that looked like they were looks like they were like client proofs, essentially, even though they were completely invalid, to support older clients and trick them into accepting transactions. I mean, this is what you can do in systems where clients don't validate. So I'm actually not seeing too many show-stopping technical issues there, especially given they can fix them.
I think that in general, we agree that the system, at least as it is described to be operating right now, is functional, can quote unquote work. The bigger questions are these lofty goals, the ambitions they have to try to solve a lot of problems that no one else has solved before.
Well, I mean, I'd go as far to say the notion that they're going to make Libra decentralized requires them to go do something which is indistinguishable from a scam, which is to go and make it no longer asset-backed. Like, to go put that in day one just is really dishonest. So there's no getting around that.
I don't think any of us really and truly expected that Libra coin would be a decentralized permissionless system, really.
No, there's just no reason for them to do that.
Yeah, my expectation is that it's a marketing term, whether that's a marketing term to, I don't know, people who already operate and work within the cryptocurrency space, or whether it is, I don't know. I expect it's just some kind of virtue signaling to, I wouldn't say you guys, people like you, because you guys will tear it apart, but to the broader cryptocurrency ecosystem.
Well, if I recall correctly, I think that I've seen the timeline as something like 5 years after launch to try to reach some of those lofty goals of proof of stake and like improving the basket market mechanism or whatever that will be. And 5 years is a very long time, so it's almost one of those things that you hear a lot of like the ICOs of 2017 talking about, we've got our like 5-year roadmap and this is where we're going to go. So, will this system even be functional and operating 5 years from now is a big question, much less like, are they going to be able to solve some of these crazy problems that seem highly unlikely?
Well, that's very much the Ethereum memo, that these lofty problems that they've had is always a few years away. It essentially keep some kind of blind faith while people put up with and accept things which aren't really great. So I guess they're just kind of, like you say, they're just following what everybody else does.
It would be fascinating to hear some conversations those top Ethereum developers and other leaders have been having with their lawyers about what on earth to say to the public, given that they don't really have clear ideas of where they're going to go next.
All right. Before we start to close out, is there anything else that stood out for you that you'd want to discuss here and now and raise?
Nothing comes to mind to me. I think we covered it pretty well.
I think that's about it. I mean, there's a lot of open questions, and that's why I think a lot of potential paths that this could go down. And I've talked to some of the people who are working on the project, and they do seem quite genuine in their aspirations. Only time will tell exactly how lofty these goals really are. Like how much are they actually going to be able to achieve? I think the biggest disappointment was how vague a lot of the stuff in the white papers are and how early it was released. And it does seem like the reason for that was probably more political, of just trying to get something out there in the public to let politicians and regulators argue about for a while. Whereas the rest of us, especially like the technical folks, are more just sitting here scratching our heads, trying to fill in the gaps.
It is interesting, the strength of the pushback. You look at how there's a bill apparently in the U.S. Senate or U.S. Congress to go and ban companies, tech companies with revenues of what, 25 billion or more, from being able to participate in finance at all. Being able to issue these coins at all. I mean, it's quite remarkable just how strong that actually is, that people would go and start pushing around bills like that.
Well, they fear losing control.
Well, if you fear losing control, sometimes the better thing to do is not advertise to opponents that you fear that.
Yeah, yeah. I mean, if I was to try and summarize this conversation, it feels like to me, Peter, that your main view is stop lying, stop being so disingenuous, stop conning people, because we've experienced so much of this already with other scammers in the space. And for you, Jameson, it's slightly different. You seem to be more on the, can we have some more information? Can we have some clarity? Because without this, we don't really know what you're up to. Is that a fair summary?
Well, if this is a scam, then on the bright side, it seems like, the only folks that are really going to get scammed are the folks that are buying into the Libra Association with their $10 million fees, right?
Yeah, I guess so.
And also, as much as I'm critical of them for dishonesty, if they advertise Libra honesty, honestly, I really wouldn't care that much. If you want to honestly create a centralized corporate coin that's backed by a bunch of US dollars, so what? Go ahead. I mean, it sounds like a more reputable version of Tether. And I have no issues with Tether other than the fact you're probably wind up losing your money because those assets are likely to get seized. But, if that's a risk you're willing to take, go for it. Have fun.
Would you use Libra?
I wouldn't trust it for very much money. I wouldn't trust it for more than I could afford to lose. But hey, if it works for my payment needs, I would probably use it once in a while.
If there was a non-AML KYC wallet, then I might find a use for it. But I'm definitely not going to be signing up for any new services that require that.
Yeah, well, that's exactly what I expect from you, Jameson, without a doubt. Okay, well, listen, look, I don't need you guys to close up and tell people how to get hold of you. You've both been on the show before. I'll share that out anyway. Jameson, you had a couple of people catch you up. You're now back in the lead. That's your fourth appearance. So appreciate you coming on. Also appreciate you coming on, Peter. And hope to catch up with you both soon.
Thank you.
Thanks for having me.
All right, that's the second show in the Libra series. How was that? What did you think? What did you think of what Jameson and Peter had to say? They are Bitcoin heavyweights, so it's really cool to get their perspective on it. And I knew coming into this interview they were both very skeptical about the project, but they do have slightly different views on it. Peter seems more worried that Facebook is misleading people with their intentions and they've acted dishonestly, whereas Jameson is worried about that Facebook needs to provide us with more information and a greater clarity, obviously around KYC, AML, which is obviously going to be a big sticking point there with Jameson. While I think they both expect Libra to either fail or at least fall short of its bold roadmap, I don't think either of them has fully written off the project just yet. I haven't myself, and it's so interesting speaking to people about Libra because there are so many different views, from those who hate it to those who think it's really positive. It really does split people. Anyway, listen, I hope you enjoyed this interview. Make sure you check out the next one. I'm going to be covering the regulatory challenges that Libra faces with Jake Chavinsky and Preston Byrne. Another great show. Got any questions about it, do hit me up. Also, if you do want to support the show, there's a whole bunch of things you can do. Whether it's listening to the ads or leaving me a review, it all really helps. It's all up on my website. Just head over to whatbitcoindid.com, click on the support section. That will explain everything. Right, I've got to get on a plane. I've got to head off to SF. Going to be going out for dinner with a few people tonight and then recording this super cool interview tomorrow. So, got any questions, feel free to reach out to me. My email address is hello@whatbitcoindid.com.